What's going on? Alex here, and I'd like to welcome you to yet another Efros Financial Power Hour. That's right, we're going to spend an hour talking about finance, taxes, financial planning, all this good stuff, and I've got quite an hour prepared for you. Now, in this hour, we're going to cover some Reddit questions about financial planning, taxes, all that typical stuff that we do. We're still doing that, but now, in the interest of always taking things to the next level and always upgrading things for you guys, we're introducing the ability to actually call in live into this stream and contribute. I've been promising this for a little while, and now, hopefully, it works. Now, we've done some testing. It didn't crash the entire stream, but who knows, because what can go wrong if you introduce live calls into a live stream? All right. So the phone number is as follows. All right. So 323-531-3321. Okay. And a few ground rules with regard to calling in. All right. First of all, we ask that you don't block your number. Okay. So if the number on the caller ID comes in as unknown, that's not a call we're going to take, all right? Because at the very least, if you're going to prank call this live stream, you should put the time and effort to spoof your phone number, all right? And if you can't do that, you don't deserve to prank call this stream. So that's number one. If you do call in, we ask that you provide your phone number. We're not going to show it on the stream, but it'll allow things to be on a level. Now, the other thing is, let's keep it G-rated, all right? We don't want to upset YouTube and all the advertisers and all of that, so let's keep the vulgarity to a minimum on the calls, because if someone calls in and they're a clown, I'm going to berate them, I'm going to edit them out, and it's going to be like it never happened. So with that, let's see how that goes. Again, phone number is 323-531-3321, and if we get some calls, if you have an interesting story, if you're an attorney and you're an accountant and you have some insights to add regarding any of these questions that we're covering, feel free to call in. There's the phone number right there. And with that, we're going to get started looking at our first Reddit question of the day. Now, this comes from the subreddit 2X chromosomes. And as you can see here, it was deleted before I could even talk about it. But you always have to be prepared as a planner. You have to prepare for the unexpected. And of course, we have a screenshot ready to go from before the deletion. All right, let's read. And as we're going through here, put yourself in a position of a financial planner. All right. We always talk about the fact that financial planning is not just about the numbers. There's a misconception, especially by students looking to get into financial planning, that it's all numbers, that you just put 2 and 2 together and you're all set. But with that perspective, you're leaving out the psychology that goes along with it, the human element that's crucial to being a successful financial planner. Because if you can't work issues out between two clients that are sitting in front of you, be they spouses or what have you, then you're going to have a lot of problems in the financial planning space, because it isn't just selling a product and then collecting a commission. All right, there's thought that goes into it. There's a level of nuance, and a lot of it has to do with how you present situations and explain situations to your clients and help them navigate difficult financial waters. Now, again, put yourself in a position, as we read through this, of a financial planner, and you have these two clients sitting in your office explaining to you this situation. All right, boyfriend of 5 years is asking for a payout on the house I own. This comes from the category of you can't make this stuff up. Let's take a look. My boyfriend and I have been having a rocky patch. The underlying issue is that there's a power dynamic that is weighed in my favor, specifically because I make significantly more money than my boyfriend. And I own the house we live in. I bought the house 6 months before I met him. It's in only my name on the deed in the mortgage, and I was a high earner when I met him. I work at a job that requires a professional license and make over 6 figures, while my boyfriend is a delivery driver, think Grubhub, and makes probably what the median income is for the area. So there's an income disparity here, which for many couples can be difficult to overcome because it results in a power dynamic that plays out in the way that we're seeing here. When it comes to the house, I pay roughly 73% of all household expenses. My boyfriend pays me a flat fee of $500 per month as his contribution to the household mortgage / expenses. This amount has not changed in 5 years. I've paid for all the repairs on the house, probably $15,000 at this point, and furniture, etc. myself. When we go on trips, I pay for them. We usually have 2 to 3 vacations a year. Sometimes he'll cover the cost of the rental car, but otherwise it's me paying for the airfare, Airbnb, entertainment cost, etc. I do this because I'm well aware of the income disparity between us, and I don't want to add financial strain to him for things that aren't necessities. But now he's saying that all of this makes him feel insecure. And he would like a formula to determine, this is the boyfriend, how much of his $500 a month that he pays towards the mortgage and all the other expenses, his contribution of $500 a month, how much of that went towards actually paying down the principal on the loan. And then he wants to use that figure as his minority stake or equity stake in the house. Therefore, if we break up, I would owe him this amount as a payout. Currently, the figure he's coming up with is $11,400 based on his math. At the end of this year, he will have paid me a cumulative $30,000 in rent payments over the 5 years we've been together. So in essence, he wants $11,400 should we break up, and he would have to vacate the home. Wanted to get some other people's reactions to this, since I'm in total shock. What do you guys think of this situation? All right. Now, this certainly is new to those who haven't done financial planning in their lives, because you haven't seen how much you have to expect the unexpected, because this is a real dynamic that people find themselves in. This is a breakup fee that someone wants, and as if breaking up is not difficult enough, it would be terrible if there was a cash payout associated with it, especially if these people aren't married. All right? And it's easy to scoff at this situation and say, that's ridiculous, a payout for a breakup. That's crazy, right? Because this person, the boyfriend, did get value out of the payments. He had a place to live. He didn't have to pay rent otherwise, where he would have. And on top of everything else, when we move out of an apartment that we rented, we don't have to get a payout from the landlord for the mortgage payment that we contributed to, right? So that's obviously crazy. But this is where the finesse comes in as a planner, to have these people in your office with straight faces on both sides and know how to guide them. And it's important to make sure that you identify that every side has a point and you can see where they're coming from. But at the end of the day, you have to come up with a resolution. And this is not just adding 2 and 2 together. And we've had these issues with couples that come into our office, and we expect to do financial planning, number crunching. You need this much in assets, this much in income, bam, boom, bam. But many times these are couples that are on the brink of divorce, and they want to figure out how things are going to play out. And it always starts off as amicable. Everybody's always nice in the very beginning. But surely enough, those couples with divorce on the horizon, they start to get further and further apart, to the point where after several weeks, they're not even communicating, right? So you have these two parties. They were amicable at first. Of course, it turns to be less than amicable before you know it. And you still have to work with them somehow, even though this one's not returning calls, this one's not responding for 2 months in a row. And you end up in a situation where there's a 3-way battle, all right? It's you against the client is fighting amongst themselves. So this is how things can go sideways in financial planning, all right? And as someone getting into the field, you have to be able to improve the situation, right? You can't just say to one party, you're crazy, the other party, you're perfect, have a nice day. Okay? You're always going to have an unhappy client. You have to either find a happy median between the two sides, which in this case, I have to side with the poster, because it's hard to say that someone has to pay a breakup fee for the mortgage payments that were paid down with their rent, okay? The alternative is you have to explain it in a way that the boyfriend would understand that what he's asking is absolutely absurd. but do it tactfully. Do it in a way where they're not going to walk out of the office and slam the door and go on Yelp and do their little complaining with the 1-star review. But I thought this was an excellent example of how in financial planning, it's not just crunching the numbers, and you have to expect the unexpected, because things can change so fast, and they go from normal to not so normal to absolutely ridiculous in lightning speed. And on one hand, that's where the challenge comes in, but on the other hand, it keeps you entertained. All right, stops it from being boring. I'll put it that way. All right. So here's a little taste of what financial planning actually turns out to be. In this case, I would try to take the position that the boyfriend is not correct in demanding a payout because he received value out of the payments that he was paying, and he was paying such a minority portion of the expenses overall that really it could be calculated that he owes her for all of this home that he was able to live in. All right. So there you go on that. If you thought this was as ridiculous as I did, like the video, leave a comment down below. Let me know what you guys are thinking, and we will move on to the next question. But I want to remind you, we have the ability for you guys to call in. Don't be afraid. I don't bite. Number is 323-531-3321. If you have an interesting story to share, if you have questions, let's talk about it. All right. And with that, we're going to move on to the second Reddit question of the day. All right. And comment here from the Grant Cole says, girlfriend needs to tell that guy to kick rocks. I agree with you. Very astute observation. Okay. So now we move on to a bit of a business issue. All right. This is for the startup entrepreneurs out there. This is for the people starting their own business. All right. And this is a common issue that those people can run into. Boosting revenue for a sole practitioner quickly. All right. So this is a person that has gone off on their own as a tax professional, and they want to know how to boost that revenue in a short period of time. Let's read. I recently went out of my way and have started my own firm, which, by the way, Shark Attacks 23, congratulations. I see you have your CPA credential. It's a beautiful thing. I've taken this journey, all right? I've been there. It's hard, but it's worth it. What are the best ways for me to get revenue coming in as quickly as possible? I was thinking of joining Paro or TaxFile to do some freelance work on the side as the firm grows. I'm also open to assisting anyone on here if they're looking to contract some work out. Now, for a bit of context, the Paro and TaxFile references here are for services that act as a middleman, all right? So if you are a handyman, you may work through Thumbtack, right? So Thumbtack gets the leads. They have the professionals. They are the middleman. They're kind of like the Uber of independent contractors, right? So if you want to find the contractor, instead of looking at ABC contracting, XYZ contracting in your local area, you just go on something like Thumbtack. It's a marketplace for labor. And you say, look, I need a contractor. And they might have reviews, they might have references, and all these things to make the decision a lot easier with regard to hiring a professional. Okay? And that's how these Paro and TaxFile services work as well. They act as the middleman. All right? And in many cases, your entire business that you get through them will be directed through that middleman. And sometimes their cut can be pretty significant. Okay, it could be 10%, 20%, 30%. And you're locked in to their ecosystem because you are a service provider. Just like an Uber driver doesn't have clients directly, right? They work through the middleman being Uber. So clients tell Uber, hey, I need a driver. And Uber says, hey, we have a ride for you, and come drive someone from A to B, right? But those aren't your clients. And you're at the mercy of that platform that you're utilizing, of that middleman, of Paro or TaxFile. I don't know exactly how those work, but they all tend to work in similar ways in that you're taking a shortcut by avoiding the hassle of marketing, of outreach, of getting clients of your own, but you are paying for it in terms of what you get to keep on a take-home basis. And second, the lifetime value of the clients that you work with from these platforms tends to be a lot lower, because when you charge that client $1,000, $300 might go to the platform. Then instead of charging them $1,000 next time, $300 again goes to the platform, okay? And you're making a specific decision to hamper, I would say, in my opinion, in many ways, the growth of your business over time. Because instead of growing it directly and organically, you are taking the position that you're open to paying out a significant cut for an indeterminate period of time. On top of that, there's the issue of the fact that these platforms change all the time. The rules change, the payouts change, the percentages are a moving target. And in so many situations, Uber and Lyft being examples of this, right? At the very beginning, the payouts are huge to the service providers, to the contractors, right? So people were making a great living as a Lyft driver, as an Uber driver. They were quitting their jobs and they were driving for these companies. As time went on and they got more drivers, what happened? The rates went lower and lower and lower. And it became a race to the bottom because anybody with a car decided that they wanted to do Uber and Lyft. And after a while, there was more supply than they even needed. So they were able to drop the rates to almost nothing. And that's what you're exposing yourself to if you're working with Power or TaxFile or any of these other services. As an alternative to that, and the way I did it when I first started out, I was in my bedroom in Hollywood on my first day, realizing that I have 0 clients, no revenue coming in. I had to figure this out immediately and see how I could possibly move forward. And one of the ideas I had was, first of all, doing YouTube. All right. I knew that I didn't have millions of dollars to market necessarily or advertise, but I knew that I had some personality. Some people like it, some people don't. But the ability to get in front of a camera and speak was something that has brought my YouTube channel over 600,000 views. And it's made the phone ring significantly over time, which takes some of the pressure off in terms of the fact that I didn't have to be out there networking and doing all sorts of different events to meet people. They were coming to me, and that's a huge plus. So YouTube was one of those things. The other thing is what this poster outline here is, assisting anyone on there looking to contract some work out. When I started as a tax preparer on my own, one of the things I did was called everybody that I used to work with and say, hey, I'm on my own now. I could still help you as an independent contractor. And we already had the relationship. There was already the knowledge that I could provide a certain level of service and do it efficiently. So these people with whom I already had rapport were happy to contract out work. And I had multiple firms that I was working with that I worked for before that were simply saying, hey, I've got 6 hours of work for you. I got 8 hours of work for you. They were keeping me busier than I can even handle. And that was a great way to start the business, right? Because instead of waiting for one client and the second client and the third client and the fourth client and then starving in the process, you're able to keep yourself busy while you build your own book. All right. So in terms of having YouTube, bringing in leads and doing that third-party CPA work, I was able to breathe in that the revenue was coming in, the bills are being paid, and I could focus on the expansion on an organic level. So unlike TaxFile and Power and all these other services where you tend not to be able to keep the clients, they're not your clients, you're subject to the whims of the platform. These were clients that were coming in that were organic. And what I was able to do was, over time, change from doing more third-party CPA work and a few clients here and there to doing more and more of my direct clients that I got organically and less of third-party work and everything else that was being done just to pay the bills. All right. Huge opportunity there in terms of reaching out to people who you work with and saying, hey, I'm available. But you might say, look, Alex, that's convenient for people that have a network, that have worked in a few places. What if I'm just starting out and I'm a new fry and I need to hang the shingle and I don't have 3 firms or 4 firms that I can work with that'll contract work out to me? Well, in those situations, you have to get creative, all right? Because when you don't have the financial power to market and advertise, you have to be creative. And what I did, in addition to what I just described, was simply to reach out to CPAs in my area, right? So very simply, you Google CPA firm Los Angeles, for example, and then you go down here in the results and you see that there's a few firms that pop up, but Gregorian CPA comes up. Let's take a look at that, right? So we go into this website, we take a look here and go to the About Us section. Our founding director. Let's take a look at this. I'm not associated with this person, but Edmund Gregorian looks like a nice guy. I would reach out to him and say, hey, I am a tax professional. I do taxes. I'll be happy to do some work for you if you have something that you want to contract out. Never having met the guy before. And you might say, well, I don't know this guy's contact information. Fair question. All right, so if we go to contact up here, let's see if there's an email address, because I don't see one on this page. And you see that the email address is shown as info@gregoriancpa.com. Again, I have no affiliation with this guy. I'm sure he's a great guy. But if you simply take the lazy way and use this email address to contact this guy, that message is going to go into the spam folder, because every person who lands on this website gets this email address, and anybody that wants to market to CPAs and sell this service and that service is going to hit that email. You don't want to do that, all right? What can we possibly do to figure out how to reach this person directly? Well, I'm willing to bet that if you searched for or sent an email to Edmund@GregorianCPA.com or Ed@GregorianCPA.com, you're going to get the person's email, all right? This works for any firm. All right, go a little bit above and beyond. Try to get directly to the decision maker, because if you send it to info, it's very likely going to go to an assistant or a virtual assistant, and the person's never going to see it. But if you get it directly to them, then you have that much of a greater chance of a response. On top of that, I would also take a look at where these firms were located, right? I would make a list of my top targeted firms that I thought would benefit from my services, right? Not too big. If I go to their team page and I see 800 people, that's too big. They're not going to contract work out to a sole CPA if they have 700 people, okay? They're going to consider it, though, if they have 2 or 3 people. They might have additional work and more work than they have the bandwidth for. So I would say, okay, they're on Ventura Boulevard. Great. I would Google a bagel place. Bear with me. A bagel place around this address, and I would get bagels for the entire office. All right, a few dozen here, a few dozen there. You put the cream cheese in there, lox, all different types of bagels. All right, fresh from the local bagel place. And I would simply show up. That's right, unannounced, no warning, nothing. I would schedule at 2 o'clock on Thursday. I'm just going to show up at this office with the freshest, most amazing bagels these guys have ever tasted, right? And I'm simply going to say, hey, I'm a CPA in the area. I work with firms such as yours to provide tax preparation services as a contractor. So if you have any spare tax returns, I'll be happy to help. But in the meantime, enjoy these bagels. And you might say, that's crazy. You didn't make an appointment. They didn't know you were coming. They have no idea who you are. Exactly. But I can tell you that they're not going to forget the bagel guy. All right? The one that dropped off 2 dozen bagels the week before. They're not going to forget. And even better, if you get into one of these firms, you say, hey, I want to speak to, let's say in this case, Edmund Gregorian. The person at the front desk might tell you, yeah, he's not available. All right, he's in his office, he's busy. Okay, that's perfectly fine. Well, let me leave these bagels with you guys. And then when it comes down to it, give him a call back. And you say, hey, I'm the guy that dropped off the bagels last week. How you doing? And that starts the conversation. And I can tell you that it sounds weird, it sounds crazy, but no one has had a higher return on investment on bagel expenses than this guy right here, okay? You can't be afraid of this stuff, right? What are you going to do? Are they going to shoot you if you come in there with 2 dozen bagels? No, they're not going to bite you. They're not going to hit you with a club. they're going to say, all right, this is something unusual, but let's see what it's all about. And I guarantee you 9 times out of 10, if it's a small firm like this, the decision maker, could be Edmund in this case, will come out of the office and try to see what's going on. And if they don't, they're definitely going to come out later when they whiff those amazing, beautiful bagels. And when you call back to follow up, they're going to know who you are, even if you didn't meet at that initial meeting. So if you're thinking this is crazy, if you're thinking this will never work, great. Keep thinking that. It worked for me. And sometimes it's better to take these chances because nobody else is willing to. And you're going to spend a little bit and try to get as much of a return on investment as possible. If this person starts directing business your way, that might be thousands of dollars of revenue that you receive for $30 in bagels. That's a good return on investment if you ask me, and that's a bet that I take every time. So that is some career advice on that front. Hopefully, Shark Attacks 23, this is helpful, all right? Think outside the box because that's where the opportunity lies, right? You can always start with Google ads and Yelp ads and all of this stuff, but you're going to be shelling out cold hard cash, and it takes a while to tweak your marketing campaign before you start seeing a return on investment. So to prevent yourself from starving while you wait for clients, I would advise you to get creative, start putting content out there, and really think hard about pursuing one of these platforms because it's easy in the beginning. They bring clients your way, sure, fine, but you don't own them. And you have to question the long-term viability of a relationship with these third-party platforms because they're not in it for you. They're in it for themselves, and your interests can be at conflict very many times. All right? So, if you guys are watching, if this is helpful, feel free to drop a like on the video, subscribe to the channel because there are going to be more videos, and let me remind you, the phone number to call in if you have an interesting story, an anecdote, if you have a question, is 323-531-3321. All right? So with that, we're going to move on to our next Reddit question. And this has to do with careers, all right? On-campus recruiting. Some of us have been there, some haven't experienced it. It can be pretty intense because the school is staking their reputation. They're trying to show these Big Four accounting firms that we've got the best and brightest students and we've got the best program to prepare these students to work at your firms, be it Big Four or otherwise. And the firms are trying to put their best foot forward. The students are trying to put their best foot forward. It's like a weird dating scenario, but I've gone through it, so I can speak on it and offer some advice. So with that, let's take a look at this question from Psych77. It says, got a scary email after reneging. To start, I know the ramifications that come with reneging on a job offer, and I evaluated the two options I had for a while before making my decision. After I sent my reneging email, so this was a job offer that came along that this person accepted, and then they decided that wasn't the best opportunity for them, and they said, hey, I'm going with a different offer. After I sent my reneging email, I got one back shortly after saying they were extremely disappointed and were going to notify the chair of my majors department and career services department. They also asked where I accepted, which I don't think I should share. If anyone has guidance or has been through anything like this, please let me know. And here's an update. I have a meeting with the career services department in the next few days. I got reported. Okay, so in looking through the comments, I saw that this was a Big Four firm that was reporting this poor student. And I can offer some insight into this because I've been in a similar situation with on-campus recruiting myself. So what happened was that at the Rutgers MBA in Professional Accounting program, the Big Four firms would come to the office, among the smaller ones as well, but the Big Four were what everybody was focused on because you wanted to start at that level when you left school, right? You can always go to a smaller firm, but it's harder to go to a bigger firm. So everybody was gunning for Big Four. And we provided our resumes. We went through interview training, all this stuff with our MBA class. And it was up to the Big Four to say, hey, we want to interview this person. We want to interview that person. When the first firm was coming on campus, and they're a Big Four accounting firm with 4 initials in the name. You do the math. I didn't receive an offer to be interviewed. Okay, so they saw my resume and threw it in the trash. They weren't interested, which to me was a bit tough to deal with, because I said, hey, you know, it's one thing to at least have a chance, but to not have a chance is a whole different thing. So it was messing with me, right? And I happened to be on campus the same day that the Big Four firm was doing their interviews, because there were emails sent out to the whole class saying, hey, this firm is interviewing on this date. So I knew they were there. I was interviewing for the top 5th firm. So they were the Big Four. I was interviewing for the 5th. So I was on campus. I had my folder with my beautiful resumes on fancy paper, and I was fully suited up in a crisp business suit. And I'm thinking, I'm here. I'm ready to go. I just interviewed with another firm, so I'm fresh. Just went through all the crazy questions, and I'm as locked and loaded as I could possibly be. Should I just go over to where they're doing the interviews and say, hey, I'm here. My name is Alex. I think I'd be a great fit for your firm. I didn't receive an invitation, so I'm not on the list. But if you could spare 5 minutes, I can explain what my qualifications are. I can explain why I'm interested in working for your firm and why I've always dreamed of working for your particular firm, right? Yeah, okay. So much to my surprise, they said, okay. They looked a little stunned that somebody would come in when they weren't invited. The gall of doing so, right? But I said, hey, you know, I'd rather ask for forgiveness than ask for permission, which is a bit of foreshadowing in this story, okay? So they allowed me to have the interview. They sat down with me. Both recruiters were sitting across the table. We went through my resume. I said, hey, I've always dreamed of working here. This is a great firm. You offer this, this, and this. I've done my research. I know these guys backwards and forwards, right? And they're asking me questions. We're going back and forth. We're having a good time at this interview. I'm thinking this was the best decision I've ever made. So at the end of it, I say, all right, thank you so much. I appreciate it. Everybody shakes hands. Everybody exchanges business cards. It's a beautiful thing. What can go wrong? And I was on cloud 9. I have to tell you, whenever you take chances like this in your life that you may not be sure about, but you go out of your comfort zone, I can tell you the high from that is splendid, all right? It's absolutely extraordinary. So I'm thinking I just made the best decision ever. I got 2 interviews in. I didn't even have to iron my suit twice. Great. The next day, I'm leaving class, and the director, who also happens to be the professor of the professional accounting program at Rutgers, the big kahuna, the guy at the very top of the program, who was just teaching the class, he's also the professor, as I was leaving, says, hey, Alex, I need to talk to you for a second. And I'll go, okay, here we go. I'm going to hear it now. He goes, yeah, so the people from the firm, they reached out, and they told me that you went down there without an invitation. And I said, yeah. And he goes, that is not how our program is structured, all right? That's unacceptable. And they're very upset that that happened. And I said, well, to be fair, I did ask if they had time available and if they would do the interview, right? I didn't come in there. I didn't point a gun at anybody's head. I simply asked if we could do this, and they said, yeah, let's do it. So the director of the program says, Alex, we have a reputation to uphold. And what I need you to do is write a letter of apology to these recruiters at this Big Four firm, explaining that you're very sorry about what happened, that it's not going to happen again, and all of this. This was close to 15 years ago. I have yet to write that letter, and nor do I intend to. So I told the director exactly that. I said, look, I put an offer out there. They accepted. It is what it is. If they don't want to hire me, that's perfectly fine. But you have to take chances, all right? You have to go out of your way a little bit, out of your comfort zone, and see what's out there. Because what if they did offer me the job? Then this would be the smartest thing I ever did. But even with how it played out, I'm more than happy with the outcome, and I wouldn't change a thing about it, all right? In life, what I'm learning every day is that it's better to ask for forgiveness then permission. Now, not in all situations. I don't want you guys taking this the wrong way. All right. But just know that whenever you think, hey, there's an opportunity here, I'm a little scared to take it, but I also feel like the upside is greater than the potential downside. That's a bet you take every time. All right. It's 15 years later. I still remember that, and I have no regrets. None. Okay. So in this situation, it's interesting to see how vindictive the Big Four firm is. I mean, what is this student supposed to do? They had an offer, they accepted it, but then what if they got a better offer? This firm doesn't seem to care about that. They seem to take the position that, oh, you should go with us. It's not as good of an offer, but you're not allowed to renege. It's not a great situation, but at the end of the day, the Big Four is a numbers game, right? They know that they're going to get so many students coming in. They're going to get so many students quitting after 6 months, after a year and a half. So it's not something that's going to blow anybody away if you say, hey, I'm not really crazy about this offer. I'm going to go with this different firm. And it's interesting that they're showing how they treat people before you even onboarded. This could be a sign of things to come, because I guarantee you that this same firm, when it comes to doing layoffs, they're not going to hesitate to fire you. Okay? So you have to go with the best offer you have based on your perspective. Okay? Reneging is never good, but understand that if they're Big Four, they deal with this all the time. Right? Because you might get an offer from Deloitte and you're so excited you accept that offer, but then an offer might come from PwC and you might say, well, given all of the circumstances and upsides and downsides, I like the PwC offer better. What are you going to be stuck with? Deloitte? I don't think so. You got to make a choice regarding what's right for you. The other thing is that in terms of compensation, what if this offer that they accepted is $80,000 and what if the new offer is $100,000? If you accept the $80,000 offer, you're stunting your income for the rest of your life, because that's what your raises are going to be based on. When you move firms, what the new firm is going to pay you in many cases is going to be based on what the old firm was paying you. So you may have limited your income potential over time from this to this, from taking an offer that was not what you wanted, right? So I would pose the question to the recruiters here, what would you do? Would you take the lesser offer to avoid having to renege on your acceptance of an offer that you received? Or would you take the better one? I wonder what they would say. So it's kind of disgusting to me that these recruiters went to the limit that they did, went to the extent that they did, because this is what I faced myself. And I thought that was so petty of them to say, hey, let's not just not hire this person. Let's twist the knife and complain to the head of the department as well. What do you guys think of this? Am I completely out of line here? Or is this something that makes sense? All right, so if you're with me, feel free to hit that like button. Let me know in the comments below what you think of this situation. But this person clearly got reported, and it looks like they're living the same situation that I lived. So I never second guess a situation where there's upside that's greater than the potential downside, but this is what you can encounter in on-campus recruiting. Okay, it's high stakes, and everybody is trying to get the very best out of it. So I don't think you need to settle just to appease some recruiter, because at the end of the day, they don't care about you. Okay, simple fact. All right, here to keep it real. All righty, so with that, we're going to move on to the next question. Drop some comments down below, guys, if you have something to share, if you have an opinion. Am I completely crazy? Am I on board with what your perspective is? You let me know in the comments. And let me add again that we have the ability for you guys to call in and talk to me live. All right? So 323-531-3321. We haven't had any brave souls yet. And I promise it's going to be fine. So if you're watching, feel free to call in. If you're sharing a story, an anecdote, if you have a question, because I got plenty of questions in the comments, but now you guys are being shy about calling in. So either way, you think about that. We're going to look at the next question. And this has to do with everybody's favorite financial product, life insurance. All right. We talked on the last live stream about the fact that life insurance is typically sold by brokers who have their own interests in mind instead of the interests of their clients. In this situation, we're going to address a different aspect of life insurance, and that has to do with how to set up the beneficiaries on life insurance so that it plays out in a way that you want it to. Let's read. Life insurance beneficiary, my child or my spouse or both. This comes from Golden Mama Life and goes as follows. We are a married couple with a 3-year-old. I'm choosing the life insurance beneficiary, and I was wondering if choosing my child or my spouse changes the taxation, etc. If I choose only one of them, what happens if myself and that other beneficiary die together? If I'm choosing both of them, is there a golden ratio for this? All right, and this is a crucial point in terms of planning, because there are so many individuals out there that get life insurance. They get the right amount of life insurance. They get the right type, and everything is perfectly set up. But when it comes to designating the beneficiaries, it all falls apart because whoever they were working with didn't go so far as to imagine what the end game is going to look like once that policy, God forbid, has to pay out. And is the situation going to play out in a way that's advantageous to all the parties involved? Because when you have a 3-year-old, I can tell you from experience that 3-year-olds are not the best with managing money. I know it's a shocker, but usually around 4 is when you could trust them with a few $100,000, in my experience. I'm kidding. But what's going to happen is if a 3-year-old is the beneficiary to a life insurance payout, typically a court is going to appoint an administrator, executor, whatever you want to call it, to manage those assets on behalf of the child, of the minor. So it could be called a custodian, what have you. I'm not an attorney here, but typically somebody who's a professional is going to be appointed by a court to manage this amount, because typically if there are no other estate or trust documents in place, when this person turns 18, they're going to get the entire payout, okay, which may not be good. An 18-year-old with $3.5 million might not spend it in a way that the original purchaser of the life insurance would like or intended, okay? So in so many situations where we do estate planning, the question is, should the beneficiary receive all the funds at once? Should they receive a little bit at a time? Or should they basically have a payout that's a balloon payment after 30 years or some other condition is met? There's a trigger that occurs. And you'd be amazed how many stipulations are put into the planning documents, the trust document or the will, to ensure that the planning is done correctly. So in this situation, what might actually be a better alternative, instead of putting the child or the spouse or both onto the life insurance policy as a beneficiary, is to establish a revocable living trust, okay? And make that the beneficiary of the life insurance. So what happens is that you could then appoint beneficiaries of the trust. But more so, you can designate in the trust document any sort of payment schedule or regime that you like. You can specify that upon death, the proceeds go in the trust, each beneficiary gets 50-50. Or if one beneficiary dies, then this is what happens to all of the funds. Maybe 100% goes to the living beneficiary, okay? Or the children of the dying beneficiary can get the proceeds, or the next of kin, what have you, right? So you determine the direction that the funds can go. On top of that, you also determine the timing of the payments. So with a trust, you can appoint a trustee whose responsibility it is to manage the assets within the trust. And you might say, hey, I only want the beneficiary of the trust to receive $50,000 a year. And that's it. No matter if they ask and beg and plead, $50,000 is the cap, and that's all they get. Or you might designate that this person will receive the full proceeds once they've held a full-time job for 10 years, right? They work for 10 years, and once the trustee has determined that they've met that requirement, they get the full payout, millions of dollars. You can customize these payment regimes and payment setups any way you like with a trust, whereas the insurance company themselves, they just want to pay it out. They don't care about all of this. They just take the money and pay it out. But if you want to set parameters in terms of how this is all managed, then a trust can be a great vehicle to have more flexibility in terms of how these funds are handled. I'm telling you a story. I was in a office of a CPA at one point, and we were talking about a third-party tax preparation engagement. Like I described before, I was going to do taxes for them as a contract. I didn't work for them. I was independent, and I was ready to do tax returns for their clients. And while we were having a conversation with this CPA, his phone rang, and the conversation went exactly like this. Hello? No, I'm not going to allow you to purchase a rental property with the trust funds. It's not a prudent use of the funds. Okay, well, then if you don't like it, you could sue me, and just know that I'm going to use the funds within the trust as per the trust agreement to defend myself. Okay, goodbye. That's exactly how the conversation went, and it showed you the power that a trustee can have. All right? So whether that person is 18 years old, 25 years old, and all of this, and they ask for or demand the funds, the trust agreement can stipulate that it's at the discretion of the trustee. All right? So revocable living trust can be a very powerful tool in this regard, and it can be the beneficiary of a life insurance policy, which then will allow you to dictate with extreme specificity how those funds are handled and how they're distributed. You can also specify that you'll distribute income for a certain number of years, then the rest goes to charity, or you can stipulate that some portion of the life insurance goes to charity up front, and then someone will receive income from those assets for a certain period of time. There's as many setups as there are people out there. It's a matter of working with a qualified trust attorney to make sure that the trust document is put together in a way that allows you to direct the funds in a way that makes sense. The other thing I'd say is that in choosing trustees, you also have to be careful, because we had planning scenarios in our office where there was a trust document and there was a trustee, a successor trustee, and a successor trustee, right? So they really went out of their way to make sure that in any case, there was a trustee that would manage the trust. However, all of them died. Okay, so one after the other, everybody passed away. So there was no living successor trustee. And the question is at that point, what happens? And in many cases, you have to get the courts involved. It's a whole process, because a judge at some point will appoint a trustee to manage the assets. What could have been done as an alternative is to appoint a professional trustee, right? So you appoint a trustee that's a bank, that's a trustee service. They're a professional fiduciary that the idea is that they're going to exist even if all of the other successor beneficiaries pass away. So what you could do is put a trustee, successor trustee, and the final successor trustee is that professional institution, so that it's been around for hundreds of years. It will be around in the case that all of the other trustees pass away or they are not willing or able to administer the trust. So in that case, even if a bunch of unfortunate events occur in quick succession, you still have a clear chain of command in terms of how those assets are administered, and you're not looking at delays in administering those funds, right? Because even if a court has to appoint a professional trustee, the thing to keep in mind is that that could take a while, all right? And in that time delay, the market might turn against you. The real estate market might collapse. All sorts of different events can occur that will affect the amount of assets that you have in the trust, right? It can go from 10 million to 5 million while you're messing around on the legal side. So revocable living trust with logical succession of trustees is a huge point in terms of how to manage the situation. And in that case, you don't have to choose either the child or the spouse. And by the way, the taxation is not affected either way. Life insurance proceeds are not taxable. Even if it goes to a revocable living trust and then it's distributed out, it still should not be taxable. And if you choose only one of them, what happens if myself and that beneficiary die together? Okay, so all these different scenarios can be addressed with some astute estate planning. Now, what do I mean by that? That's also one of those terms that's lost their meaning, right? So retirement has lost its meaning. Estate planning has lost its meaning. When I was doing financial planning for a firm in Brea, California, an investment firm, again, we managed about $300 million for clients, we would point out 4 estate planning documents that were the pillars of a solid estate plan, all right? And I'll get into more detail on this, guys, in a future video if you guys are interested. But very typically, the first document is a will, okay? A will governs what happens to the assets that are titled to an individual directly. So if you have a home in your name, you have a car in your name, you have a taxable brokerage account in your name, those are all governed by the will, all right? And we would stipulate that that will should have a pour over provision, which stated that upon the death of the grantor, those assets that are not titled to the trust, you also have to have a trust. That's the second item that I'm going to address. The pour over will says, hey, retitle everything to the trust once the person passes away. Because what often happens is that someone makes a will, then they acquire asset A, B, C, D, and E, and they forget to title those assets into their trust. So the will say, hey, everything that's not titled to the trust, retitle it to the trust, will you? The second document is the trust document, okay? So you're establishing, in many cases, a revocable living trust, and that is going to allow you to have a great amount of specificity and granularity with regard to how assets are treated once the individual passes away. Much more so than you have with a beneficiary designation on something like a life insurance policy. So the second pillar is the trust document. You have the will with the pour over provision, you have the trust document, then you have the advanced healthcare directive. That allows an individual that you appoint to make decisions on your behalf from a health perspective, right? So if someone has dementia or they're unable to function for whatever reason, that person who's designated in the advanced healthcare directive is able to make decisions on that person's behalf when they're unable to, so when they're incapacitated, okay? So that has to do with medical decisions. And then the durable power of attorney allows that individual to make decisions other than medical decisions for a particular individual, right? So you have the will with the pour over provision, you have the trust, you have the advanced healthcare directive, and you have the durable power of attorney. Now, the durable power of attorney does not last after the point of death, right? So when that person passes away, the grantor passes away, then the will starts to dictate what happens from there, right? So you have the executor appointed in the will, and they will take it from there. The durable power of attorney stops being effective once that person passes away. But up until then, durable power of attorney can make decisions with regard to financial accounts, with regard to moving amounts around to pay for living expenses or a nursing home, what have you. So those 4 items are crucial in terms of solid estate planning to ensure that there isn't a break in the chain of command, and that once someone becomes incapacitated, nobody knows what to do. Because nobody's been appointed in the advanced healthcare directive, right? They haven't passed away yet, but they're not able to make decisions. The market's moving against them. All these things are happening. You got to move money around to pay for their living expenses, and you're stuck. So that's why it's important to do some solid estate planning with a knowledgeable individual that has at least 4 of those aspects ready to go for you. And if they're not addressing all 4 of those, you have to ask them why. Right, there has to be a good reason. Every estate plan is different. Every estate plan is custom. I get it. But at the same time, if those 4 aren't present, I would want to have justification as to why, because in so many cases, it just makes sense and allows the individual to achieve their goals once they pass away. So hopefully, Golden Mama Life, this was helpful and you got some insight out of it. And if you guys are still watching, smash that like button, destroy it, absolutely break it. All right, leave a comment down below. I love reading your comments. And in a future live stream, which will happen on Wednesday at 7 p.m. Pacific, 10 p.m. Eastern, feel free to call in, get some questions ready to go. We'll have a conversation. So the live stream is not just me pontificating for an hour, all right? I'm pretty sure everyone would love to hear somebody else's voice in addition to mine, so I can pontificate just 80% of the time, all right? So hit that like button, subscribe to the channel, and leave your comments down below. I love reading your comments. With that, we're going to cap it off today for the, I don't know which power hour this is, but this is September 14th, 2022. And as always, hopefully this was helpful.